Hey everyone, welcome to another episode of WealthLab Strategy Trading. So here we talk about our actual trading using WealthLab and show our results. We've been doing this for around February, I think. So yeah, we've been at it for a few months. Let's take a look at where we're at. This is the equity curve of my MetaStrategy that I'm actually trading, and we're showing the results. These results are hypothetical over the past 3 years, but I have been trading this over the past at least 3 years, and my live results are pretty much matching the backtest results. So let's see where we're at. So here was the tariff decline here that I'm going to zoom in on the most recent kind of section of the equity curve. So we suffered through this pretty bad drawdown, this pretty drastic and historic drawdown caused by the uncertainty over the tariffs. And I remember, Volker, you know when we hit this bad decline here, you're saying, well, it'll take about 6 weeks for us to recover. And I was a bit skeptical. I said, well, it may be a little bit longer than 6 weeks, but we haven't talked about it lately. But actually, we've recovered from that drawdown. So here is the drawdown. And you could see, let me zoom in on the whole drawdown here. You could see we've actually come out of the drawdown. We're no longer in a drawdown anymore in our meta strategy.
I think that's pretty cool. It's a bold statement to say 6 weeks, but things happened that way, and it's actually good. So
I think it took longer than 6 weeks.
yeah, it took longer than 6 weeks. Yeah, a little bit. I mean, it's not over yet, I would say. So volatile markets, but hey, you're back up.
No,
Strategy's
the
been
the
doing well.
drawdown is over. This drawdown is over.
Yeah, yeah,
I mean, the
yeah,
next drawdown will come, but this bad drawdown is over, and we can.
yeah. I mean, yeah, I think the volatile market
And
might
the
not
white
be
line
over.
here is SPY, so SPY is still in a drawdown. So
Yeah.
we came out of the drawdown before SPY did even. So yeah, looking good. And our annualized return for the 3 years is 27%. So I'd say our meta strategy is running on all cylinders.
Yeah, it's pretty good. The results are good.
I mean,
Um,
I still want to diversify more. I want to find strategies that trade on other markets. I want to find effective strategies that go short. Remember our friend Lee Klaus from Fidelity?
yep.
He's communicating with us on the YouTube channel, and he recently posted a detailed rules for a shorting strategy that uses fundamental data, EODHD, which is a good source of fundamentals, and it has the fundamental data that Lee is mentioned. So I'm going to implement his idea and test it out for a future episode. And we'll see if this could be a viable shorting strategy. Let's see how your idea works, Lee.
Yeah, and I think I did send you a strategy over that I actually wrote an article about in the German magazine.
I know, I
And
know. That's what we're going to talk about today. Your strategy for the German magazine, and I think you called it SMA Variations. I like the word variations. I always like to have different variations in life.
cool. Yeah, then let's take a look.
All right, you want to just dive into it? Here we go. I opened it. It's a building block strategy. We have it running from the year 2000 to 2026. So I'm going to change that to my little named range here, 2000 forward. I have it going to 2030. I'm a little bit more optimistic than you that I'll survive a little bit longer. So we've got the
That's good.
benchmark of QQQ. We've got it trading on one symbol. This trades on QQQ.
Yep, that's correct.
Okay. So talk us through the rules.
Well, the rule is actually pretty simple. If you open it up, the difference is here we have three entries. We're not taking, I took the 200-day moving average. I must admit, I didn't do any optimization. In fact, I didn't really invent it that much. I heard someone saying, or I saw an advertisement of someone who says, or if you buy, if the moving average, if the closing price goes above the moving average, you buy and you the 200-day moving average, and then like you invest like 10% or 20% or whatever every time it's above it, and if it goes below it, you reduce it. And I was a bit skeptical, and in fact, I still was, because I changed that rule a little bit, and it's producing good results here. Not sure, whether I would take it as it is, but it is actually producing a pretty good result. The rule is simple. If the close is greater than the 200-day moving average, you buy, but you only buy for 33%. And then the next rule, that's the variation. If it has 2 consecutive days above the 200-day moving average, then you buy again. So it's a confirmation of, hey, I'm above the moving average quite a bit. Then you buy again for 33%. And then the next entry, the last final entry in this one, of course, you can change it, and I didn't optimize it or anything. If it's 3 consecutive days above the moving average, then you buy your last 33%.
And
So
just
yeah.
to just to clarify, where did you get the idea?
I'm, if you go through the internet, you see all these people who say, and his statement was, it makes you rich in 6 months, a few 100%, which is not true.
So it
It
was
depends.
some source on the internet. We don't know
Yeah,
exactly. All right, let's run it.
it's an advertisement, so I didn't go any deeper. But the promise would be, I'm a multimillionaire now. So
Well, I mean, we have an annualized return of 9.3% compared to 8.9% of the same period in QQQ. So it actually did beat the QQQ buy and hold.
yeah, it's doing, as you can see, a little bit better. And if you go to the drawdown, I mean, there you see it's doing better. But if you go to the drawdown tab, you see that the drawdown is much lower.
Oh, yeah.
Yeah, it's pretty consistent around. I mean, the highest drawdown is around 20%, which is, I think, an extremely good number for the white line, that is the Qs itself,
Yeah.
which had over 3,000 days in the drawdown, and it was down 75%. And again, in 2008 with around 70%.
Hmm.
So I think in comparison, it's doing good.
Yeah, it
So,
is doing good. I like it. I'm
so
thinking though I have so many strategies trading TQQQ, NASDAQ 100. I mean, I wonder if it would work on another market.
okay.
So I'm wondering how this runs on these individual sector ETFs. I'm going to actually open up our strategy ranking tool. And let's see, symbol rankings. Let's select a data set of those sector ETFs. Let's select ETFs here. And we're going to select your strategy, SMA Variations. We're going to give it 33% of equity.
How simple is that, right?
Yeah,
And
this tab here will run the
yeah.
strategy on all of the symbols in the data set. So let's give it a run.
So we have the first one.
So let's see. So it did best on
Technology.
XLK, which is a technology ETF. And here are the latest 3 entries. It just got in here, Volker. Look.
but it's actually XLK. Is that the right one?
That's the right one, XLK.
Yeah, oh, okay, so cool. So, I mean, I would wonder how it looks all together. If you put them all together and give it 5% as a portfolio.
We could try that, but I'm looking here at the individual results, and although the raw profit was highest with XLK, actually the annualized return was highest with XLC, 16%. So let's run it on XLC. So XLC is communications. Interesting, huh?
Mm-hmm.
So it just exited
Okay.
some positions here at a 70%, 55%, and 62%. And it just entered a new batch of positions here. So let's look at that equity curve. So it caught great moves here on some of these sector ETFs. Maybe we do what you suggest. Let's run it on that data set and change the position size to 5%.
Yeah, so that you get hopefully all positions.
All right, so let's go to a portfolio backtest ETFs, 5% of equity. Let's see how it did. So here we go. Here is our result. I'm seeing that we'll probably have some NSF positions. So we had 0 NSF positions. So good. So this we were able to get all of the positions, and here is our result. So we had an annualized of only 5.7%. I mean, that's not spectacular. I mean, it did, minimize the drawdown, but yeah, that's the result on the full data set of the ETFs. I mean, I might consider doing it on like a few of the ETFs, but yeah, I think it probably deserves, some more work and more thought.
Yeah, I think so. I think it was too simplistic to really be included for that time.
But interesting idea. Thanks for throwing that out, and just shows the capability of Wealth Lab. You can see all of these promises and people, saying you're going to get rich just trading this simple strategy. You can mock it up here in Wealth Lab without writing a single line of code. We used our drag and drop building blocks and we validated the strategy. I mean, it was okay. I mean, would you get rich on this strategy? I mean, probably not.
Yeah, no. I mean, yeah, I think it was solid on the cues, but on everything else, it didn't look that good, I must say. So I would be careful.
But interesting idea. And in the meantime, I'm going to work on Lee's shorting strategy. Let's see if we can get that going for next time.
Cool.
All
Good.
right. So thanks for watching, everyone. All right. Take care, everyone. Bye.
Bye.